Okay, the rules of rule compliance. I'm going to try to convince you that the WBAT staircase as a diagnostic experiment is very helpful for that. So let's first think about why do people transgress tax rules? And in the literature, basically this question has been answered in three different ways. First of all is that people say, oh, well, it's because people are bad by nature, they must be kept in check with harsh punishment. And the second answer is that their norms and values are below standard. And the third answer has been that people simply take the opportunity when it offers itself. And the good thing about the stand of the literature is, of course, that all these 3 points of view are true, but none of them is covering the whole truth. And therefore, I think that we should combine them. But first of all, why are they not all true? Or not completely true? Punishment is not all. You know that. Most people comply most of the time to most rules, even if punishment is almost absent. And I can illustrate this very easily by observing that in this room nobody is just strangling his or her neighbor just now, although there is no police around. So I rest my case. And also on tax, it's true that most people pay most of their taxes most of the time. We have seen a number of figures already yesterday about that. Although the probability of being caught in the act of tax evading is indeed very low. So punishment doesn't do its job always, but on the other hand, it means a lot. And the good example of that is, of course, that many, if not most people, tend to speed in their motor cars as soon as no speed cameras are around. And there you see that the lack of punishment is certainly a problem. Going to the second explanation about norms, norms is not all either. It's very easy to observe that most people that are convicted for crimes of non-compliance, they happen to have quite ordinary norms and values that are not much different from those that do comply. And that is certainly true for tax non-compliers as well. And also, it has been observed time and again that very upright persons with very high norms and values may, under circumstances, transgress certain rules. And I invite you to do some inner inspection to see whether this is true. Also, the third point, opportunity. Opportunity is also not all. Indeed, if there is no opportunity, there is no non-compliance. That is, of course, quite clear. But if there is opportunity, that doesn't mean necessarily that there is non-compliance. Not every opportunity will be seized, though often, of course, it is. So, having seen that all these three explanations for rule transgression have something in it, but not all of it, I think that that is a good idea that they must be combined somehow. And that's what my WBAT model does. I'm going to introduce it here. Well, that is the integration of these 3 points of view. The WBAT model depicts people that transgress a rule as climbing a staircase of 3 steps. They first must be willing to transgress the rules, that's the W. They then must be able to transgress the rule, that's the BA. And the third point is that they must be daring to transgress the rules. So let's go one after the other and think where we are. First of all, let's see where we start. If you ask people to comply to a rule, the standard mode of reaction is to comply, to do so. And that's because we are all social beings. People tend to comply to what's asked of them, both in social and informal settings. In most cases, if I would ask one of these people here something, they tend to give me an answer, even if they have no idea what I'm talking about. And that's also true in formal settings. Of course, you have to be socialized before that. Newborn babies are not complying to anything, but after some time they learn. And of course, there are lots and lots of exceptions, and I'm not going into these. One good example is the rule, keep right in traffic, that's complied to by everybody. Nobody feels seduced to keep left, except for the British, of course, and that's why they Brexit soon. Okay, so this is the starting point. If I ask people to comply, they may have a tendency to do so. And if so, then they are not seduced to not comply. But then there's this first step that they might develop a will to transgress that rule. Some people won't do that. They stay on the ground floor of not being seduced. Others feel a tendency, a will to go beyond the rules. And of course, we can ponder what are factors that have something to do with this will. And first of all, if you have high standards, ingrained morality, then that will goes down. If there's much social disapproval of the people that are important for you, that goes the will goes down. Understanding of the rules is important. If you don't understand them, the will goes up, and if you understand them, it goes down. Complexity to comply has something to do with it. More complexity, more will to not comply. And of course, compliance costs maybe come in the equation as well. Also, the benefits of non-compliance. So here is a part of the economic model coming up. So, we are now here. Some people have not been seduced, others would like to transgress the rules, and now they face the second step. They must be able to do it. Some people won't. They just don't see an opportunity to put their will into being, and they stand on that first step as being frustrated. The others may go up and find an opportunity. Being able to transgress is, well, there's another word, of course, for an opportunity of transgressing. And I mean that in the sense that, of course, you have an opportunity to transgress, but if you're immediately caught, I don't call that an opportunity. So it is an opportunity that's not for sure ending in being caught. Complex rules, many exceptions, the opportunities go up. If it's difficult to establish for inspectorates whether you transgress a rule, the being ableness goes up as well. And if the inspection is distributed over very different authorities, that's also an important factor in making that being ableness high. So now we are at the last step of my staircase. Some people are still not seduced. If they will have the will, they are looking whether they are able. If not, they end as frustrated non-compliers. If they are being able, they now have to face whether they actually are going to do it, and that has something to do whether they dare to do it. And of course, daring to transgress has something to do with the deterrence that is focusing on them. If there's a low probability of being checked, it's easy to dare to transgress. And of course, something like whether it's high probability that when checked, you're caught if you are at the wrong side of the border, and whether there's a high probability that something is happening then to you. Of course, sentence severity has something to do with, but also indirect consequences as loss of standing or loss of prerogatives that you had as a compliant citizen or corporation. So in the end, now we have to complete WBAT model. 4 steps. You cannot be seduced. You can be seduced but frustrated. You can be not seduced and not frustrated but deterred. And if not, you end at the final level of non-compliance. And what I like to say is that what is important is the total height of the staircase, no matter which of the steps you make higher, if the end of the total staircase is the same, then I say, hey, then you are as a potential non-complier in the same boat. So here we have the case of that the being able step is very high and the other two steps are pretty low. In the middle figure we have that the deterrence step, the daring step, is very high and the others are low. And here I have an example where it's the willingness, so it is most people don't feel will to transgress the rules while the other things are low. And what you see here, that in the end these steps are just as high, but for very different reasons. And my point is now that when you contemplate measures against non-compliance, it's crucial to diagnose what of these three steps should and can be increased or need be increased because it's too low. So if you are in charge of getting a compliance system working, try to find out for any given rule and for any given taxpayer or any given rule complier, what is the lowest step of the staircase, and try to increase that. If it's the willingness step, I think about educating people, trying to influence them, talking about morality, show people that others do comply, and so on. If it's the being able step that needs to be increased, you should work at closing opportunities. And if it's the daring step, well, here my sheet is not as nice as it should be, then you have to increase the punishments. And alas, I have no time at the moment to go deeper into how you could do that, and that's of course very much dependent on what rule you are talking about. But I say it's one of the taxpayers' rights that it's a taxpayer's WBAT right that he is addressed at the right level. So you should not bother people with the steps that are already high for them. So if you are in charge of getting compliance on some tax rule, try to find out what is the weak and the lowest part of the staircase and focus on that. That may be different for this tax rule, it may be different for that group of taxpayers. Try to find it out and focus on these things, and don't bother taxpayers with the other two steps if that is not a problem at all. And that's why I would stop now my presentation. Thank you very much.
Well, now our next speaker is going to be Lotta Björklund Larsson, and she is a research fellow at Linköping University in Linköping, Sweden. And she is going to talk, she's just published a book on her experience and field work with the Swedish Tax Agency. And so, Lotta. Thank you.
All right, thank you, Nina, and thank you for the invitation. Glad to be here and share some of my thoughts about the Swedish Tax Agency. So from a staircase and trying to be inside the individual taxpayers, we go inside the Swedish Tax Agency. Let me see here now. There we are. We know that we at the Swedish Tax Agency apply a set of laws that we can steer into the ditch with, says Gunnar. And he continues, it is so important for us to uphold the legitimacy. The rules do not allow for exceptions, but the reality out there is different. We have to acknowledge that the centennial tax reform of '91 was a political decision that could be agreed upon only because certain issues were left out. But it is the agency that has to live with its consequences and carry out the law in practical life. We have to be very careful and consider what is reasonable and realistic in our decision so that these are deemed legitimate. As a manager at the agency, I recognize this reality as there is no set of laws that is 100% applicable by the book. So, a black letter interpretation of the law is not possible, neither in this agency's internal control practice, nor that it would be acceptable to Swedish society. This presentation addresses how this agency strives to be seen as legitimate among the taxpayer it serves and collects taxes from. My overall argument is that if we are to understand how a revenue authority accomplishes such a standing, we have to study its practices. In this case, the relation between tax issues that can be controlled and those that can be communicated to society. I will introduce you to the law the agency can steer into the ditch with, according to Gunnar, and then bring out a snowplow to exemplify how the agency avoids to do so. The Swedish tax agency has quite an extraordinary standing. In service, citizens currently hold this bureaucracy in the highest esteem of all the nation's government agencies, despite the fact that Swedes pay among the highest income tax rates in the world, and income taxes amount to 2/3 of the total tax revenue. With tax compliance issues vigorously debated all over the world, there are lessons to be drawn from an apparently successful national tax collector. Thus, I also argue that a well-functioning tax collecting authority has to be taken seriously when we talk about taxpayers' willingness to comply and to pay. So back to the issue of legitimacy. How do they do it? It has been proposed that the foundation of a functioning welfare state is a tax system that is widely accepted and considered fair and legitimate. Yet, to appreciate the legitimacy of the tax system, it has to be understood more broadly. A legitimate tax system, from taxpayers' perspective, is not only a legal mandate, it also has to be practiced as such. Our gaze has thus to reach beyond the structure and the aims of the actual law to see how the system is applied and interpreted. Back in the 1970s, the agency recognized that the way it treated taxpayers did not have a positive impact on compliance. And since then, much has happened. I do not really have time to go into the history of changing strategies, but currently the emphasis has moved to both educating and morally shaping the taxpayer. Quote, "Our vision is a society where everybody wants to do one's fair share." It says there on the bottom in Swedish. I spare you for the Swedish one. And it's a very moral motto that the agency nowadays advocates on its website. It means that the law has to be applied equitably for all taxpayers, be treated fairly, but also that it is up to the individual to pay what they should in order to contribute to a fair society. Concentrating on personal income, the law states that all exchanges of work having economic value are deemed to constitute income, regardless of whether the services or whether the compensation, consists of money, a service in return, or material objects. Any recompense from exchanges of services and goods is legally described as income and ought to be subject to tax assessment. One aspect of this is that barter legally compares with cash compensation. Another is that the proximity of social relationships between exchangers is not relevant. And this is what Gunnar recognizes in his introductory quote: "We apply a set of laws that we steer into the ditch with." So, studying the law, how it applies the law in practice, I, as an anthropologist, follow one of the agency's risk assessment projects ethnographically. This was one of the largest analyst projects ever performed at the agency. It took 3 years from start to finished report, and as such, it came to touch upon many contemporary issues that are at stake at the agency. I followed this risk assessment project from the analyst's initial idea to the finished report, through a survey, in a random audit control, the internal deliberations among the analysts, the presentations and discussions with management, all insights that came together in the report that in the end was not published, as most of the other work done at the agency is. So the new insights the project created was deemed to have a negative impact on tax compliance and thus also on the agency's hard-earned legitimacy among the Swedish population. The content of the report challenged the values the agency says it holds and applies to society and was therefore deemed not to be publicly communicated. The subject of attention was faulty cost deductions among smaller business entities. Such deductions reduce the income tax returns and thus decrease the tax that ought to be paid. Up front, these deductions looked easy to identify and describe, yet reality proved otherwise. The project aimed to understand why such errors are made, how common they are, and their consequences for tax compliance among similar taxpayers, as well as among taxpayers at large, and then also ultimately, what are the risks for the agency controlling such cost deductions? An example of such a cost deduction is the usage of a snowplow tractor. Svenne, one of the analysts that lives in the north, was the one who initially introduced this example. The north has, as you can imagine, long snowy winters, and any farm or larger house needs a snowplow to clear out the courtyard and driveways so that, for example, forestry machines can get out. An assumption, and reinforced by anecdotes, is that most snowplows are paid for by the business entity that most, if not all, farms are registered as. Following the law to the letter would make usage of such a snowplow in front of the farmer's private house income and thus taxable. According to the law, it is private usage of a fixed business asset and ought to be subject to preferential tax. But what the law says and what is done in practice obviously differs, from both the taxpayers and the agency's perspective. If the farmer shovels snow in front of his barn, it is part of farming activities. Should he shovel with it in front of his house, it should be subject to tax. A good plow could also be used to shovel snow in front of the neighbor's house, just being friendly, or perhaps in exchange of something else having value. In all these cases, there should, according to the law, be an estimate of what the service was worth, and this value ought to be added to personal income and subject to tax assessment. Such incomes from snow plowing are seldom, if ever, found on a tax return. Even if the farmer knows that such costs ought to be subject to tax, they're just too cumbersome to evaluate and to account for. Who would make such an economic estimate and more explicitly put such income in the books? Besides, why bother to pay tax on something that is not detectable in the first place? Even if the agency wanted to, there is no way for it to apply the law and control such presumed costs. How would you, for example, see if a farmer's snowplow had been used in a private context? The possibility exists in theory, of course, that the farmer also has a privately owned snowplow, decided to shovel his private driveway by hand or even rent one. If the latter is not applicable in practice, the possibility exists in theory. The intention of the law is obviously to make a sharp division between business and private life. All taxpayers, regardless of whether they are employed or self-employed, should be treated equally as private citizens. The mundane yet very apt snowplow example illustrates that all taxpayers are not equal before the law, neither in theory nor practice, and this is a problem the agency recognizes. An employed taxpayer might also have a snowplow, but one that is supposedly paid for with taxed income money. This is not fair. With high income taxes, the employed person would pay for his plow with taxed money, and on top would the price be augmented with VAT of 25%. This privately owned plow would be much costlier than the farmer's next door, who buys it with untaxed money and VAT deductions. So although the deliberations about the snowplow did not make it into the final report, it kept appearing throughout the project as a silly and extreme example of what interpreting the law to the letter would mean. It points to issues that are at stake for the agency. Enforcing taxation on activities, such as snowplowing at home or as part of business activities, show that it is not just controllability that is an issue here. At stake also could be the agency's reputation as either being too finicky or even ridiculous in its controlling efforts. So, back to the agency and its conference rooms, where the conclusions of the report was discussed. Our project looks at how the boundaries are drawn in practice, says a manager. A colleague emphasizes the grayness of these areas. The boundaries are not easily defined, and reminds his colleagues that since the centennial tax reform, Sweden's had a law that encompasses everything that has value subject to tax. Lars, another of the analysts, says at a presentation of the report, quote, "The law says one thing and practice another," end quote. And this was followed by a widespread sniggering around the conference room, as Lars' view is nothing new and a well-established fact at the agency. His manager spells out the reality, and I quote him, "We will never get a set of regulations that are exact. It will always be our praxis that decides where the actual boundary is drawn," end quote. Yet, what they internally know and what can be communicated are two very different things. The arguments as those above have to be contained when the law is inconsistent and difficult to apply in practice. The agency cannot communicate this inconsistency publicly, as it would then appear disloyal to its democratic constituent, the government. More importantly, emphasizing that the law is inconsistent would make the tax system appear increasingly illegitimate, and no one would gain from this. The agency has to do the best it can, given the law and specific governmental institutions. There is also an opportunity to err here. The agency can never know for sure why an incorrect deductions are made. Much of the literature on tax compliance emphasizes intentional wrongdoing. The agency employees are very clear that there are different reasons for omitting costs, deductions like the snowplow, and speculations would abound if the reasons for claiming these are through ignorance, carelessness, or intentional cheating. And in this case, it is small businesses that are seen to err. Such entrepreneurial activities are encouraged in Swedish society. It is seen as a way to increase economic growth and address unemployment. To criticize small businesses on grounds that can be challenged is politically stupid. So there are obviously manifold borderline cases, the snowplow being just one. How am I doing on time?
You're fine.
I'm fine. All right, so the agency here could paraphrase Donald Rumsfeld on the issue of nuclear weapons in Iraq, or it was not Donald Rumsfeld apparently who said this initially, but Nassim Nicholas Taleb, and state, as we know, there are known unknowns. Known knowns, there are things we know. We also know there are known unknowns. That is to say, we know there are some things we do not know. But there are also unknown unknowns. The ones we do not know, we don't know. So, most importantly, the agency recognizes the unknown known, the disavowed beliefs and suppositions that form the background to our public values. These cannot be publicly acknowledged, as they are in opposition to the motto of the agency. It does not say publicly that it knows about them, yet the underlying feeling is that you know that we, as an agency, know, but we will not do anything about it, the issue, as long as it's not too obvious or pressing. What is going on in practice with the actual tax compliance is a very different matter, and the agency is more or less aware of it. So what cannot be controlled and or communicated has to be left at bay if the agency is to retain its legitimacy. This is why it tacitly allows for such exchanges. The multitude of mundane practices, such by the now boring snowplow, are also seen as safety valve in a society where income is so very controlled. The clogging up of such values could push avoidance elsewhere, and if the steam is not let out, well, to retain legitimacy, it is better to keep quiet and bury such outcomes, just like this report that I followed. Thank you.
Okay, so our next speaker, we're going to go to Africa and look at the challenges that are faced in trying to build fiscal legitimacy in Africa. And Professor Atiya Waris from the University of Nairobi Law School is going to come and speak with us. So Atiya.
Good afternoon. Are you sleepy yet? Ah, that means you're awake. Okay. Well, when I was asked to come and speak, one of the things that I was having... Okay, thank you. When I was asked to come and speak, one of the things that I kept trying to think about was how overarching is trust, and how to unpack legitimacy. And some of the work that I've been doing for the past 10 years is about fiscal legitimacy. And I've been trying to unpack what that means. So I'm going to walk you through what I think fiscal legitimacy means, the basic pieces that I think it covers, which is broad and I think is applicable in most countries in the world. And it's a lot of words have been used yesterday and today that will resonate with everybody's tax collection processes, and in the process of which, hopefully, we will see where we're going in Africa. So I like pictures, and it's the afternoon, so pictures are good. Well, this is a billboard that you find in Liberia, and basically they're saying tax brings development. And in really small lettering, it's pay your taxes. But if you look at where they're putting the poster, it doesn't look like a very affluent neighborhood. And the thing is when you're doing media or you're trying to build up tax in your particular countries, then you have to look to see how you're legitimizing the process through the methods with which you're communicating to your taxpayers. And a couple of years ago, I was in Washington, and there's this great billboard, which is an electronic billboard, and it's literally running constantly, telling you how much tax money Washington contributes to the federal pot. Clearly, we don't like being part of a federal pot in Washington. We want to know how much taxpayer money we're giving in. And so these discussions start to tell you how people are relating to their tax collectors and to their states, and then how the communication is working. Another picture I saw in a country that will not be named was a man standing behind a big bulldozer. And this is a massive billboard outside the Ministry of Finance. And under the bulldozer, which is crushing the road, is this little tiny emaciated person. And next to the bulldozer is this really well-dressed person, looks a bit hefty. And the line on the billboard was, pay your taxes or this will happen to you. See, it's all about how we're communicating, isn't it? Although I am not an anthropologist, it's the language that I see across the world as I go along. And since we are in Austria, we should start with Schumpeter. Only the Austrians know who Schumpeter is, clearly. Well, Schumpeter is a fiscal sociologist, but he was also Minister of Finance in Austria many, many years ago. But he said that the spirit of a people, their cultural level, social structure, the deeds their policies prepare, are all written in the fiscal history. So as we're speaking, we also have to see how things are moving in different ways in different countries and how they're resonating with the people in those countries. And he said, here you will hear the thunder of world history. Other scholars have added, you will find where human misery is. So, such a nice, positive, upbeat message to have in tax, clearly. So then we come to another African country this time, and again, big billboard that says pay your taxes. What you can't see, because I couldn't get it clearly, is that the picture of the building in the center is the picture of their revenue authority. So this very beautiful building, revenue authority with gardens, and you can see the area has no gardens, parks, or trees. And this is in an African city. And clearly, this is not going to get you taxes. This is going to get you a certain bit of discomfort at the best of times. So now to more serious talk. What would fiscal legitimacy look like? And I think that there are certain markers. And a lot of the issues that we've been talking about since yesterday, I kept listening, I kept hearing things like, we need transparency, we need accountability and responsibility. I mean, these are very well-settled principles, these are good governance principles. And pretty much every country in the world is aiming towards them. But you also need efficiency and effectiveness, which is your tax collection processes, it's your tax redistribution processes coming into play. And two things that are contested, and I'm happy to hear your response, is fairness and justice. But we have heard a lot about fairness, and we have been hearing a lot about justice. The question is it a measure that is across the board, or is it going to be country-specific? So if these are the characteristics, when you're looking at your taxpayers' rights, you want to legitimize your state, and your taxpayers are going to be looking to see which of these are resonating with them and which ones are weaker. And if any of these are in play, you're going to have a problem. So let's see how they unpack in the African context. So since I am here with my Commissioner General, I'm going to avoid Kenya. So here's another expression that you will see. So this is South Africa, and what was interesting was that they had an e-toll system that the entire country was objecting to it. There was so much objection that COSATU, which is the South African trade union, actually did this slow drive down the road which had the e-toll to basically disrupt transport between Pretoria and Johannesburg, which are their two major cities. And here comes ANC, which is the ruling party. They're not just saying brought to you by the South African Revenue Service or the South African government. They're owning their political space here. E-tolls proudly brought to you by the ANC. And clearly, if the trade unions are objecting to this, and there's massive demonstrations, people still drive on this road without paying e-tolls, by the way, then clearly you have a problem. There's a problem relating to your population here. So these are the diverse examples we keep picking up on. So what do I think fiscal legitimacy is? And I think it is not just about capacity. In addition to looking at the administrative revenue authorities, which I'm now going to unpack, you also have to look at societal participation and how they are dealing with the rules and regulations we're putting on them. You need to have open and informed debate as much as is possible. And then you will be able to unpack transparency and accountability, bringing in a more critical evaluation of policy. So all of these will hopefully now start to unpack themselves. So in Africa, we have two main structures. I would say three, but really predominantly two. We have the revenue authorities or administrations that run what are called semi-autonomous revenue authorities. And then we have another bundle, and this is just a simple slide with all the countries split up as much as I could discern. The other batch are the ones that have tax offices still firmly housed within ministries of finance or treasury. Now there's 25 on one side and 30 on the other, so clearly it's a big split. The question is, why are some going in one way and why are some going in the other way? The answer is, sorry, Alexander, the IMF. The IMF gets to change directions of how administrations are run predominantly, and then later on they morph into whatever they morph into. But this is the divide. The question is it going to be a different type of taxpayer right expressing itself through these two different focuses? And let's see what happens. Usually when you have a tax office, it's a department within the Ministry of Finance. When you have a revenue authority, the idea is to detach itself as much as possible and stand alone. Usually the building is always going to be a separate building. They're always going to make sure there's a constitutional provision that allows for the creation of the revenue authority. The finance office may not have that structure. So there are good things clearly coming out of these differences. There's always legislative mandate across the board, but not necessarily for a tax office. There will be a legislative mandate for a revenue authority, clearly. However, the biggest challenge that's been happening is that the idea of the revenue authority is to bring everything under one bundle. Now, this becomes a problem. For example, there was one African country that opened up an office to give free advice to its citizens, and for 1 year, nobody used it. Now, not surprisingly, I would not go ask a question about snowplows to the Swedish tax agency because I really don't want to pay the tax on snowplows. But if there was an independent space that I could go and talk to, then perhaps a Citizens Advice Bureau, you have a different dynamic starting to come in because you're splitting some of these issues away from the enforcer who sometimes has to be very strong. So in Rwanda, till today, if you're a tax evader, they will come and padlock your shop. So clearly, I'm not going to go and ask the Rwanda Revenue Authority, do I need to pay tax on this? Because they might come and padlock my office. Yeah. So different debates start to come about on different areas that are now being put under the Revenue Authority umbrella. The positive part for the institutes that remain under Ministry of Finance is that the policy space remains very strong. So traditionally, your tax office would fall under your Ministry of Finance. So you have a lot of access to your policy departments, your analysis departments. By splitting it and moving it separately, you now take the enforcement arm that is sitting on all the data, and you split it away from the policy arm. Now, doing this has done a lot of negativity, which means the taxpayers are also very nervous about things happening. If you want legislative change taking place in your country, you're lobbying the finance office. But the people with the data who can back it up are the revenue office. And if there isn't good communication between the two, which happens in many semi-autonomous revenue authorities on the continent, then you clearly will not have taxpayers' rights coming across very effectively. Then the one who wins is the best lobby. And this has been a very good example in Zambia, where there was constant change taking place with the revenue authority trying to make changes in mining tax design. And every time they got the paper up to the cabinet office, the mining lobby very strongly came in and was able to derail it because the revenue authority wasn't allowed political space within the Ministry of Finance to push their arguments forward. So you have this constant problem with the back and forth and the linkages. And what starts to happen is the person with the most money and the largest amount of capital calls the biggest shot. So your taxpayers' rights get skewed a little bit. So don't stress yourself with the chart. You can have a look at it later. The idea of the chart was to try and see where some of the structures are and the powers and responsibilities, and trying to give them a little bit more definition on where they should be. But I did put it in as a table, although I also heard this morning people don't like tables, so let's see. Okay. So all I've done is I've taken the 7 markers. So the transparency, responsibility, accountability is on the one column. And then we've looked at what the challenges or the types of challenges are. And these, of course, are examples. It's by no means comprehensive. So in the issue of transparency, one of the biggest problems has been getting data and figures and getting access. Now, the data tends to be housed within the Revenue Authority agency, but they do communicate it to the Bureau of Statistics. The problem is that if you don't equip your Bureau of Statistics very carefully, then the result is that your data is going to be compromised. So the idea is to try and push your spots to where they should belong. So you don't have spots with multiple data sets. And this has started to happen with the FIU keeping one set of data, the financial intelligence units. The Ministry of Finance keeps another set of data. Ministry of Trade keeps another set of data. And it's very hard to actually get them all into one place. Accountability. The issue of corruption comes up inevitably. And it's also got a lot to do with the relationship with the ministries. And if you have better linkages within some of these agencies, I find very often the perception of corruption is usually worse than the actual corruption. But the lack of communication destroys any possibility of saving that overall picture periodically. And then I looked at the issue of taxpayer education, and I was laughing because, I mean, these outreach offices in the revenue authorities are intended to be a form of taxpayer education. But they cannot do everything within the revenue authority. I had a conversation earlier and we said, well, the purpose of a revenue authority is not to do research. The purpose is to do other things. So building linkages with other institutions that are already tasked with it. So for example, the Ministry of Education in your country, in universities or other teaching institutions, and having them unpack those issues in that way usually works. I once heard that in Sweden, in kindergarten, they talk about who you are as a Swede, for example, and it included paying taxes, which clearly not working so well. Okay. But now we come to efficiency, and usually the biggest issue with efficiency is everybody looks at information technology. It's the common answer. But here's the problem. If there is no electricity in your country, please do not put in an iTax system. So we have got a lot of... little bit slow there, huh? Okay. We have got a lot of problems with African countries where for example, the donor aid coming in is pushing towards information technology and systems around it, but nobody talks about whether the electricity structure in the country can cope with it. So I know people who are busy trying to register for their tax returns very close to the deadline, like we do everywhere in the world. And of course, the website crashes. Big surprise now, put website crash in a country with electricity problem and power block, and yes, a little bit of a disaster. So it's really important to look at the state of development of your country, look at the problems it faces, and then stagger what you're doing with it. And many African countries are trying this. So we'll see how it works out. I think there should be phased implementation. Effectiveness, and this is the antagonism that it sometimes creates. When one particular government institution is more effective or efficient than another, there is always a back and forth between the other parts of the ministry. And so what starts to happen is you have these different developments coming about from collections, and people have problems with this. But if you, again, bridge the network between these different departments, so you can really see, I'm not very keen on a separate revenue authority in some ways. You really need to build those bridges and keep them there so they don't get overly siloed. Now the controversial part, so fairness and justice, and what is fair and what is just, and we can have theoretical discussions about this till the cows come home and no one will agree. But I really think that a lot of the tabulation of information, for example, on incentives, who gets them, when they get them, why they get them, have to be transparent. So you need to have these out in the open. Clearly a big problem everywhere in the world. But when you have them, they also have to be registered in a particular place. You have to be able to access them and find them. So if you go and try and find the list of tax incentives or subsidies the US government offers to agriculture, good luck. Yes? And it's the same thing with African countries. So there is a lot of synergies in some of these issues across the board. It doesn't matter which country you're dealing with. There is a lot of secrecy shrouded around this. The problem is, and this is probably the one thing that kept coming up to me, you may not have an unfair system, but the perception of it is what is going to destroy your taxpayers. And this happens repeatedly wherever I go. I also think that if you want to have a just system, you have to make sure that your entire system is very robust. Why will I pay taxes if I know my government is corrupt? Why will I pay taxes if I know it is slipping through the cracks? I mean, these are constant debates happening within tax authorities. So because I love billboards, one last one for the road. Have you paid your taxes this month? This is antagonistic. It's a big finger pointed at you, and it's a little scary if you're driving down the road or walking on the footpath next to it. So I think that if I were to end with one particular sentence, I would say that no tax system is perfect. They are all going to be suboptimal. We know there are always going to be compromises. But if you want your taxpayers' rights to progress, you have to communicate these things to them. Thank you very much.
So I am reminded, Atia reminds me of how many times I've said to the IRS and the commissioner of late that the United States has 33 million people that have no broadband access in their home. And we are trying to create an internet-based phone, tax system. Just saying it doesn't just limit itself to certain hemispheres, that kind of thinking. Okay, now our last speaker, but certainly not least, is John Nirjani, and he is the Commissioner General of the Kenya Revenue Authority, and he's here from Nairobi, Kenya, and he's going to talk about the work that he has done to build trust in taxpayer service and assistance to Kenyan taxpayers. So thank you.
Thank you, and good afternoon, everyone. As I'm the head of the Revenue Authority in Kenya, I will take you through our journey in trying to create an environment that addresses the issue of taxpayer rights. And just to reassure Tia that we've changed, so you can speak and I will not be looking for you. So, but I think it's just important that Tia has spoken before me, because I think the point she's made is that when you look at tax authorities, especially in Africa, and we're having this conversation with Jeffrey over lunchtime, is that our institutions are dealing with very basic issues. Most revenue authorities in Africa are dealing with very basic issues to do with building capacity to sustain revenue collection, and so issues to do with addressing service and defense of taxpayer rights will usually not be one of those things that a lot of time or attention will be given to. And so it's important that that conversation continues happening within our revenue administration. I'll be sharing with you what we are doing, because in our own context, we have had a very specific focus on this subject. It's coincidental that when I was asked to, when I was approached to come and speak about this, I said it's just as good, because 2 years ago we started a very deliberate journey to start addressing this whole question of changing our approach to focus a lot much more on taxpayer rights and building confidence and partnership with taxpayers, as opposed to the traditional approaches that one would expect from what even Atia said about enforcement and the strong arm kind of tactics that a tax administration would ordinarily use. Just a bit of highlights regarding our institution. We are a semi-autonomous agency, one of the ones that are legislated. We deal with both customs and also tax, and we collect the bulk of government revenue. In Kenya, we now have 2 tiers of two-tier government. We have a national government and we have a devolved system where we have sub-national institutions, and we are presently also discussing with this second level of government regarding our involvement in collecting revenue. Our staff size is 6,340, pretty small in comparison with what we know about our tax administrations, given that our country has got a population in excess of 40 million. In terms of just what we are running through right now, we are involved in a very extensive automation program, and it is partly what has helped us now to start focusing on the issue of, it's what has helped us to start focusing on the issue of improving taxpayer service, because going forward, we find that a lot of the work that our staff have been involved with, the routine work that would ordinarily keep a basic tax administration staff busy, is getting automated. And so we need to address a lot much more issues to do with supporting taxpayers, engaging taxpayers, and creating structures that help us to use different tactics to improve revenue collection. We have, therefore, as part of this process, started a very aggressive program on transforming leadership, organizational transformation, part of it being the transformation of leadership practices and management practices. And that program focuses a lot more on using a new approach where the greater emphasis is on the facilitation of taxpayers, so that taxpayers understand their rights, understand how to comply, and essentially see us more as a partner rather than an adversary, an institution to be avoided, which has been the problem we have been facing in the past. There are some practical issues that have also informed part of this change in strategy. The last 7 years, Kenya has been involved in a rapid constitutional and legal evolution. We adopted a new constitution in 2010, and there is a fundamental dynamic that happened with that constitution, especially a very famous Article 47 in our new constitution that talks about the right to fair administrative action, and which requires that public institutions and government essentially demonstrate that in implementing their mandates, irrespective of what their laws may provide, that they are adhering to the principles of fair administrative action. And in the tax area, this is one particular provision of the Constitution that has had significant implications. And some of the actions that we have been taking, including enforcement actions, have been faulted by the courts on the basis that they may not be fair in the context of fair and Article 47. So we've had judicial interventions, and generally we have had to demonstrate that we are acting fairly in implementing our own legal provisions. There are also new laws that are now being written following up on that constitution, which impose different requirements, including timelines. For example, the conclusion of audits, the conclusion of tax disputes. For example, you're required to resolve tax disputes within 90 days, and that's quite tight. Previously, our previous laws did not have a requirement for us to complete tax disputes within 90 days. So what does that mean? It means that, for example, we have, because of that requirement, for example, to complete tax disputes within 90 days, we have created mechanisms within the organization to develop a robust alternative dispute resolution mechanism. And we're putting a lot of resources in developing that as a very separate process from the normal tax process. And I'm personally involved in driving that so that we make sure that we then don't run afoul of the law, which would then mean that we are not able to implement our mandate. But there are also some practical limitations as a tax administration that we know about, in the sense that despite these very progressive provisions in the law and also in our constitution, our judicial process is not very efficient. And so taxpayers may still not find practical relief because of the fact that the judicial process is inefficient, lengthy, and costly. And so we have deliberately taken the decision as a tax administration to change the way we work so that we can use this different approach to make our relationship with taxpayers better and therefore achieve more effective outcomes. What is the new approach? As I said, we started this conversation about 2 years ago as part of what we called our change management program. And after a very detailed conversation at executive level, we agreed that our past focus on enforcement had not delivered to the extent that it should, and that it had limited possibility of delivering in the future. And therefore, it was important for us to move away from this focus that was largely fixated on enforcement towards an approach that was more facilitative and that sought to build trust with taxpayers through facilitation. And I will speak specifically about what we are doing and what we see as the ingredients of this new focus of building trust. First thing is to de-emphasize traditional enforcement approaches, especially audits. We are a very audit-focused institution. I would say that safely 60% or more of our staff would be focused on activities that relate to audits and compliance and similar approaches that are focused on interrogating what taxpayers are doing. The new approach is to focus a lot much more on what we now call smart compliance, the use of data And now with the advantage of the systems, the automated systems that we are implementing in, focusing on data collection of intelligence, and essentially using technology as a basis that helps us to determine how we want to use our resources. So that we don't have as much intensive focus as before. And utilizing data for targeted compliance interventions, and essentially looking at what is on the screen right now, the idea is that in the past, our focus was a lot more on getting people to comply because of the fear that if they don't, then we'll hit them. And I think Katia did mention that. The fear that if we don't do it, then we'll get in trouble. With the fear of audits, for example. The fear of persistent interventions and issuance of threats. And we find that because of that, then many taxpayers would avoid even to be known by the Revenue Authority. Even when you have a problem, you don't want to engage to seek support. And again, she did mention that. People want to avoid the Revenue Authority. And in the conversation that we had when we started this journey, we really asked ourselves, is that sustainable? That we are seen as an institution that our customers want to avoid? What does that mean in the long term? And we were unanimous in saying that that is not the way forward. The way forward is that our taxpayers should feel free to see, even those who have got problems should feel free to walk into our offices and say, I have got a problem, because they know that when they come to us and they've got a problem, and they talk to us about that problem, they will find a solution. But some would say, even if I have a problem, the last thing I would want to do is to walk into the office of the Revenue Authority, because my problems will then multiply 10 times. And so it becomes self-defeating. So the future for us is encouraging compliance by choice, by getting people to know that we are here to help you. You come, if you have a problem, we'll be part of the solution. Positive engagement, robust customer support, and in the process then creating a positive customer perception. And we've gone out of our way to market this. For example, what you see there is part of the marketing and communication material that we have developed. We use it internally in our staff engagement. We use it when we are running taxpayer workshops. We use it in our public functions to communicate that we are now different. We are here to help. And we talk a lot about it in every function. Those are just part of the key drivers. Again, I've already talked about that, but maybe just looking at item number 3, we seek to earn public trust, by improving our image from one of being a feared tax administration to one that is seen as a trusted partner. And in walking this journey, we've spoken and engaged with the other tax administrations, including the Swedish tax agency. And in the next slide, you see some of the institutions that we have engaged. We've learned a lot from what others have done. For example, the Swedish tax agency, whom we have now been working with for the last 2 years in this initiative, told us that they have done this since the 70s. And just like we have had today, they are still not there. But they've been doing it for almost 30 years. And so they have been encouraging us and telling us the important thing is that you've started the journey. Hopefully it will not take us 30 years that it's taken them. And we're still working with them. We still have another 1-year program with them to support us. They have even committed staff, 2 of their staff permanently to our offices that work with us on an ongoing basis on this. Enhancing customer experience and confidence. We have got a marketing department that we have invested a lot in terms of resources and people, including technology. It's one of the areas that we are also automating. We're presently implementing an automated customer relationship management system that will give taxpayers a whole variety of channels through which they can engage us. Because we have a contact center with 100 workstations, and they're able to use a multi-channel communication with taxpayers, calling, social media, emails. We're establishing field service centers that are also managed by the same department. The idea being to ensure that the frontline service centers that we have are professionally managed and managed in the context of the marketing approach, rather than them being the responsibility of the business departments, who may not have the skills to kind of package the kind of service that we'd like the taxpayers to see. Building a positive organizational values and a positive organizational culture. That is part of now our internal change management program that focuses on staff, which we are driving through various activities. For example, in 2015, just about the time when we were commencing this, we launched our 6th corporate plan, where we unveiled a new vision, a new mission, and new core values. And I'll talk about what those core values are. And we engaged intensively in getting staff to consistently understand what these core values mean, and
3 minutes.
What these core values mean, and how to practice and live them. Those 4 values are down there: being seen as trustworthy, ethical, competent, and helpful. We call it being seen to be tech. Tech meaning being the abbreviation for the 4. Those are the partners that we're working with. This is just a pictorial of our staff engagement program, where we're consistently talking about this at both executive and also at management level. And these are some of the materials that we're now using as part of our internal staff engagement program. This being what I said, there are various types of things that we use, necklaces, banners, and even wristbands. And also that, in Swahili, kuwa means be. So in all our offices, you come to our offices and the service areas, you see those kind of drop-down banners and stand banners and so on, just continuously highlighting this thing of be tech or kuwa tech, which is in Swahili. That is, be trustworthy, ethical, competent, and helpful, or be seen. So changing the way we engage, I think I've already talked about that, especially item number 2, having dedicated service support centers. At the national level, the Kenya government has got a program that is rolled out for citizen service centers, and we are part of that. It's where you have consolidated service centers where you have various government institutions, but we also have our own dedicated as a revenue authority. The use of technology, I've already spoken about that. The question we are asking is, are we getting there? And so this year, our priority will now be on monitoring and evaluation. We are going to undertake various perception surveys that will focus on those various constituencies so that we can see this journey that we started two years ago, is it working? Staff, taxpayers, government, and media. And finally, in terms of the next steps going forward, to continue rolling out our automation programs, aligning technology and organizational processes, of course emphasizing a lot on this whole question of transforming leadership, led very visibly by us me being in the front line. And finally, of course, building more learning partnerships. So one of the things, for example, I would like to pick from this workshop is who else, apart from the South African Revenue Service and the Swedish Tax Agency, can we learn from in terms of building this whole question of being customer-oriented? Thank you very much.
Well, I want to have time to open this up to the floor, but I'm taking moderator's privilege to just ask a few more questions of the panel. And I want to start with Hank, because Hank, in some of the additional slides that you had shared with me, you had some discussion about a typology called EDCOP. And I was thinking about if you could give an example of how you would apply the analysis under WBAD to a particular issue, and what kinds of approaches would be driven by that analysis to a problem.
Well, what I ordinarily do when I try to seduce people to use my system is giving them just a table, say, okay, let's have a number of rules. For instance, we do VAT compliance, inheritance tax compliance, and income tax compliance. And then I ask a bunch of tax inspectors and say, okay, what is the weakest link in inheritance tax compliance? Is it willingness? Is it being able? Or is it the daring? And I don't know. I have no idea about inheritance tax, but I can try to ask people, what do you think? Why is willing not a problem in inheritance tax? Yeah, because the people are dead. They don't will. Okay, I could solve this one myself, and then somebody else in the room will go up and say, oh, but it's very easy to increase the willingness step, because if we just outline in the way some of the other people here behind the table have given examples of that, say all other people in the country are compliant in this respect, or that it's very easy to comply if we do it this way or that way. And then after some time, not always, but after some time, usually the consensus starts to raise in an audience like that. And so what I then do is I just extract the implicit knowledge of the people that actually do this work about what is the weakest point in your own law enforcement system. And I've done that with a number of compliance agencies in food safety and in inspectorates that have to control hospitals, and in social services and in taxes as well. And so I can't exactly say this is the way to do it, but what comes out of the implicit knowledge that many people have, and I'm quite sure that if we would do it here, we would get a very interesting discussion. And of course then people from this country say, here at ours it's the being able problem, and at ours it's something else, or for elderly people it's this, and for people that are just for the first time on the labor market it's that. So the segmentation comes out by just seducing people to express their implicit knowledge.
Thank you. Lotta, I was struck in your presentation that all the work that this team did then did not become public. And I see that a great deal in the IRS, where those people who have the implicit knowledge are put on a team, and then they work and work and work and work, and they make recommendations, and then those recommendations never see the light of day unless they show up as a footnote in one of my annual reports. And I'm wondering how the members of that team felt about that.
that was
Maybe that's not a fair question.
It's a little bit unfair, if I may say. No, they were given a mandate that were, how to say, that were driven very much by their own questions, what is the impact of this? While they were doing this work, I think also the agency policies about what risk assessment projects was and was supposed to be changed. And therefore it was difficult, of course, because it took 3 years and it was a lot of deliberations. And I just put this very small examples of their deliberation of a silly example of just showing how careful they are about what they communicate and basically what they cannot control. So, but obviously they were a little bit disappointed, but I think also with this, they obviously had many presentations within the agency. This knowledge also traveled throughout the agency and throughout people who applies it. So I think it's, yeah.
Well, that was what I was going to ask you, is you're trying to bring about this transformation, and you've got employees now, and so much of the transformation is the culture of transforming the culture of your own employees. And the IRS itself has been through many such transformations, and some have been received better than others. And I'm wondering, what challenges you've faced in that, or have people just been very eager to embrace this path you're on?
I think the straight answer is no. But also maybe to qualify it by saying we quite don't know, because one of the things we see is that when it comes to change, you will never get a very clear message from those you're trying to change, that they will tell you, no, we are not interested in changing. They will essentially commit to it, but the reason why you get the impression that they may not be quite committed is because then it doesn't move as fast. But we have also lately started thinking that the problem may not be actually that people don't want to change, but it could be that people don't know quite how to do it. And so, for example, the last 2 months, the conversation now we're having, and I didn't mention it in one of my slides, is to see how we create a link between these technology initiatives we are implementing and the processes that are then required to change because of the implementation of technology and how that will impact on people. Because until you give people a kind of a practical reason to, an incentive, so to speak, to change, then maybe they don't see it. And so one of the things we are then doing is to say, look, technology is coming to change the way you work. Therefore, there is a need for us to talk about new roles, because you now don't have a choice, because technology will now do some of the things you'll be doing. So what are these new roles? So we've started now what are these new roles that need to be created? So how do you then need to change to do that? And many of these new roles that are going to be created are not roles about data and data crunching and data compilation. There will be roles relating more and focused more on supporting taxpayers, explaining to taxpayers, engaging taxpayers. That's where the work will go now. And so it becomes easier then for people to see why the change is necessary. So it's an interesting thing. And that's why we're talking about transformation. Because then he's saying it's not just about changing people, because our institution is transforming because we have invested in technology, we need to change processes, but we also need to change people. So it's a whole thing of transforming and transforming together with the people.
Right, thank you. So I was really struck with one of your recommendations was taking taxpayer education out of the agency and putting it in, somewhere else. And I've never thought about that, I have to say. And so I'm really intrigued what drove you to think about that.
Well, I did a different paper. I did an analysis of the taxpayer education system in Rwanda, and it was very interesting because it was a three-stage process over 9 years, and they had 3-year slots for each stage. And one of the things they were doing was they were sending their tax inspectors to community meetings. And the community meetings were well established. So when you were talking about tax literacy, the tax auditor would come for this community meeting. And Rwanda has a system where they have these community meetings every month, where they also have a monthly cleanup of your area. So it's a very interactive space. And one of the things that started happening was the tax auditor would come and people wouldn't want to be there. So it sort of defeats its purpose if the person giving you information is basically also able to assess where you live, what sort of residential area you're in, and how you interact, quality of your clothes. I mean, a lot of these issues start to play a part when you're trying to audit someone. And if you're giving the information and at the same time you're also checking them, you will always have this uncomfortable solution. Now, in a bigger country, like, in Kenya, we're 40 million, so perhaps it wouldn't be so obvious, but in Rwanda, there are 10 million people. And the smaller your population, the more people know each other fairly well already anyway. And so these interactions become very intense, and they actually defeat the purpose. So at the end of the day, I kept trying to figure out I kept thinking, where would be the optimum place to start talking to people about tax and paying tax? And I kept coming back to primary school and high school curriculums. I kept coming back to points where people were still learning about tax or adult education literacy programs. That felt like a safer space where you're talking about tax, but the person communicating the message to you is not somebody you might meet across a boardroom somewhere else 3 months later. And then you remove the fear in the process. I also noticed that in Rwanda, the tax auditors were also uncomfortable doing the literacy. So it was both sides of the fence. I mean, suddenly somebody's doing transfer pricing. So in smaller revenue authorities, like in Rwanda, though they only have about 1,000 plus employees. So this particular task gets circulated all the time. But you can't take somebody working on transfer pricing today and suddenly tell them to go talk about taxpayer literacy with people who don't yet quite understand the connection with paying taxes and surviving in the village they're in. So really big disconnect taking place as a result.
Do you want to say something?
Yeah, I think, in fact, the reason why this whole thing about building trust is important is because precisely of that issue. If people have to fear government to the extent that they have to go and look for a solution outside, fear the tax administration to the extent that they have got to go and look for a solution outside, then I think we have some very serious introspection to do. Because government exists for the people, isn't it? That's at least what we know. Government exists for the people. And so I think if there is a more compelling reason why we must change the tax administrations to create confidence and trust, it's because of precisely that. What, for example, we've done in our case, kind of a middle ground, is that we have made the taxpayer education program the responsibility of our marketing department. It's not led by business. It's not led by the tax people. It's led by our marketing department. Obviously, they will use resources from the business areas. But they take responsibility for making sure that it's successful, developing materials, arranging the programs, looking for the right people, maybe even training those who should come and make presentations in those sessions. And it's for the same reason that we've also we have also started, given our marketing department the responsibility to manage our service centers, where the business departments will come and offer services, but they are not the ones that are responsible for the quality of the service, including, for example, the branding and all that. But there's one point maybe I didn't mention, which is also part of that engagement process, that we've also developed an institutionalized calendar of engagement with key stakeholder institutions, including business associations and professional associations. So we've mapped out all our key constituencies, and then we have an annual program which is institutionalized, it is structured, and it is published at the beginning of every year. We're going to have meetings at these different levels with these organizations, the accountants, the lawyers, the manufacturers, the bankers, and those meetings happen in a manner that there are also then meetings that I chair. For example, next week on Thursday, we are having now an Apex meeting that I chair that brings together all these institutions, but they will also have had more intensive engagements at different levels. So, for example, I chair 4 summit sessions in a year where we have business, the professional associations, and at that level, essentially is to communicate the bigger message that as an institution, we are here to engage you. And so they feel that they, unlike before, they don't need to look for me because they know that I will be there one day at a specified date and time where we are then going to sit on Thursday next week and talk about issues and even proposals regarding how they would want to improve the engagement process.
So I know I'm standing between you all and lunch, but if there's anybody here who's absolutely, I mean, not lunch, break, but if there's anybody that really wants to ask, a particular question, I'm throwing, yes, we have someone back there. Let's do that.
Hi. So my question is actually something Atiya and I started talking about last night, and it relates to the very concept of taxpayer and how we should understand taxpayers' rights, but now taking into account a developing country perspective. Because so far we've been talking about how what rights taxpayers have against the tax administrator and how we can protect the taxpayer from excesses or abuses from tax administrator. But if we take into account a developing country perspective, especially countries that tax more consumption than income, countries where indirect taxes are the main source of revenue instead of direct taxes, there's a distinction between those who actually engage with the tax administrator and those who actually bear the tax burden. So I was wondering whether we should, from a developing country perspective, start talking about the rights of those who actually, or focus more on those that actually bear the tax burden instead of only those that actually have to engage with the tax administrator.
Does anyone talk about that? I mean, I think that's a really valid point, and I think, I'm not going to, I think that's why you have to understand the tax structure of the country as you're talking about whether it's rights or protections or burdens. And, one of the rights in the United States is a right to a fair and just tax system. And that really does include complexity and things like that and taxpayer burden. And so in a system where, most of it is a consumption tax, then your way of addressing that is going to be radically different from a self-assessment income tax system. Yeah. Anybody, did you want to say something?
I can add a little bit before. Well, thanks, Tarcisio. Yes, we began the conversation yesterday. I think that the bigger difference between developing countries is the reliance on tax. And the one thing that developing country citizens or residents register is that they are definitely part of the tax base through VAT. The question then becomes, when it comes to taxpayer knowledge or education, is are they even aware that they're paying VAT? And if they don't, then they very often don't even consider themselves to be taxpayers. And so while we're talking about taxpayer rights, very often we tend to focus on the ones paying corporate income tax or income tax as individuals, but at very high levels. The difficulty is, and I will keep giving Rwandan examples. So for example, in Rwanda, the taxable revenue for a person, an individual, is at $3.5 a day. If absolute poverty levels are at $2 globally a day, people living on below $2 are considered below poverty. And we start taxing them at 3.5, which is the case in many African countries right now. then as a result, you're clearly taxing those who are extremely poor. Now, those who are living at 3.5, the moment they buy any item from a supermarket are going to be paying VAT. So in actual fact, they may be living on a salary of 3.5 a day, but even if they escape the lowest tax bracket, they're still paying VAT from that. They don't get food stamps in many African countries. Now, they also don't realize that they're paying VAT. So although a lot of the discussion we've had is about taxpayers' rights and we've been very focused on the personal income tax, we have to remember that everybody is paying taxes.
That's very
And they
valid
should
point.
be able to access and challenge VAT perhaps.
Right, yeah, that's really interesting. Okay, well, just before you go to break, the coffee is served outside. We're going to come back at 15 hour or 3 o'clock. And
Nina, there was a
one little
question.
reminder, oh, we did have somebody. Okay, Giovanna, sorry guys, just one more question. Well, while she's getting her mic, let me just remind you to fill out your feedback forms. I really need them. They're in your folder. So before you leave today.
I'll
Go
be
ahead.
very brief because of the break. So thank you, all the panelists, for your remarkable presentations. And I want to just ask you, what's the role of the taxpayer ombudsman or advocate, if any, in your countries in this process of transforming culture? And second question is for the commissioner, that you mentioned your constitution, and especially the 47 article of your constitution, to have the right to have fair administrative actions. Is there any cases directly connected with the taxpayers' rights, starting from the constitutional basis? Thank you.
Go ahead. The article.
First, we don't have a legal requirement for a tax ombudsman in Kenya. What our constitution provides for is a national ombudsman who has got responsibility over the enforcement of that article on fair administrative action. So he does make interventions in many areas. He does also occasionally write to us regarding tax matters, but it's not really something that I would say is felt, and certainly not even by us, because the capacity of the institution is also very, very weak, and obviously because it is also involved in many other things. So they will tend to focus more on administrative issues relating to how staff are dealt with, how, if people have been, for example, unfairly removed from their jobs, rather than issues specifically touching on tax. I've seen one or two areas where they have raised issues to do with the way in which we have administered a tax law. But the problem again is because their law would conflict with the law on how we handle tax matters. So there is work that needs to be done there. Is there any likelihood that Kenya is likely to have a tax ombudsman in the future, in the near future? I don't know, but I don't think it is a priority, and it's probably not going to be a priority in the medium term. Now, regarding the cases, whether there are specific cases, yes, there are specific cases that relate to, for example, how we handle tax claims, refund claims. We've lost a number because of that. Also, issues to do with particular matters to do with customs. Customs interventions. So yes, we have case studies. Maybe if you need, I could share without details, maybe the general kind of areas in which we have had challenges regarding fair administrative action.
So I want to thank the panel. I want to thank you all for indulging me. And let's come back at 3:05. How about that for our last panel?